everybody, this is Angela Chu, and I'm here with Tony, and we're from Success Options Group. And we're back with another episode of Bullish or Bearish. Now, what is this? This is where we talk about new financial topics or hot financial topics that you really want to know about. We give you both sides of the story and let you be able to make the decision that is right for you.
Yeah, like Andrew said, I mean, it's a tasting of the topic, but it is what most people are asking us about. So it's what we talk about in the workshops and the private sessions. What can you as an investor do for these various topics?
So let's get right into it. What is today's topic? And it's a lot of fun today. So what we're doing today is I'm going to give you 3 reasons why ETFs should be your first investment. Now, what am I talking about? Well, ETFs are exchange traded funds. Now that means it's actually a basket of stocks, but you don't actually have to pick a basket. You don't have to pick them. It's already picked for you so that it covers the entire stock market. So you can invest in just this one thing, this one ETF, and it gives you the diversification of having a whole bunch of stocks in your portfolio. It just goes with the market. It is the easiest thing to invest in and the safest because you don't need to know that much. You're just going to be investing in whatever way the market is going.
So I hear you when you say it's the easiest. So like this is like the staples button, the easy button, right? And there's some validity what you're saying, like it's the thing for first-time investors. But I would argue that it's not as diverse as people think. It's not as safe as people would think because it depends on how is the ETF managed. Is it equal weighted or is it based off of market cap? And these are more in-depth terms. And if you really want to, you have to sign up for one of our workshops or watch one of our prior videos and we'll get into more details about it. But the basket is more heavily weighted towards the big names, right? So it's the Netflix, the Apples, all that stuff. So the basket's not quite as diverse as people think.
Okay, you say that, but be honest. If you were going to just pick a stock, one stock to invest in, wouldn't you be picking those stocks anyway? The ones you know, because the ones that are more weighted in these baskets are all the big names that everybody knows. So if you were just going to pick one stock anyway, you would still be picking that, like one of those big names. So it's not like you're losing out by, picking an ETF, because not only does the basket pick all the big names that you've heard about, it helps you even it out so that if one of those big names does drop, the other ones help keep it up. So you're not going to lose a ton from one stock just suddenly dropping.
Well, I mean, to some degree, what you said makes my point of you should just pick the stocks that you like. You should just pick the Netflix, the Apples. Let me give an analogy here. So let's say you go to a buffet and the buffet is really known for their prime rib and their apples, let's say, right? So you're going to buy an ETF and I get a little piece of every little thing that's available at the buffet, or am I going to just go get prime rib or crab legs or apples, right? It's like, why not just go for what they're known for? Go for the good stuff, right?
So you say that, but the thing is, a lot of people who are just at the beginning, they don't know that much, and it's really easy when you're a beginner to get very emotional about it. And you'll be staring at one stock going, oh my goodness, how's the company doing? What am I going to do? Do I really know enough about this company to invest in it? It's hard to push the button to say, yes, I'm going to invest in this. And you know what? At least with a basket, you're not investing in one specific company where you have to know all the details about it. You're investing in the stock market. You're investing in the idea that you believe the stock market is going to go up. So then as long as the stock market as a whole goes up, you win. You don't have to worry about oh my goodness, this company had bad news and suddenly I'm negative. You don't have to worry about that.
Well, see, that's where I feel like the ETFs fall apart, right? Because they're most likely the big ones, the SPY, the QQQ, all that stuff is weighted towards the big names, right? So you're already not diversified as much as you might think. So now you're buying the whole lot of other things that are on the buffet menu. And you're not able to get the real big returns because let me just finish this point is like most of the gains for this year have come from the big names, right? If you actually do the analysis, the big names are accounting for most of the growth.
But the thing is that there are so many different kinds of ETFs. Okay, so you're saying don't do the whole, stock market ETF, like one of the big index ones. You can do it by sector. Like all of the big names that you're talking about, if you trust like the technology sector that has like all of, like the technology, stocks, you could pick an ETF specifically for that sector and just get the gains from all of those. So you can still have some of your diversification without having to put all your money in one basket, like in one stock. You still get the growth of that whole like grouping that you want. Like, so yes, then you're taking out all of those, extras that you say you don't want, but at least, you're still not all your money in one place. It's still somewhat diversified. Plus, not only that, another big reason for ETFs is you cut down on the volatility. Individual stocks have a lot of volatility. Doing a fund, like an exchange traded fund, an ETF, like cuts down on that volatility. So you don't have to worry about it spiking and like doing those big, up and down that you can sometimes see in stocks. It just, it just follows the stock market.
Right. So now you're talking about volatility. And this is a great one for me because when we're talking about individual stocks, I can buy insurance on my individual stock, right? So make sure you watch the options video or, attend one of the workshops. But let me use another analogy, right? So let's say I own this, or I'm in this whole neighborhood of houses. I can buy insurance for my one specific house. And with this ETF idea, now I had to buy insurance or the protected puts for the whole neighborhood, right? And it just means I get less for my money. So I'm not able to protect my investment as well as I could if I was more, focused, I would say.
Okay, so you're talking about protective puts. Just because you can do that for a stock does not mean that you can't do that for your ETFs as well. And there are ways to do that. I mean, we cover stuff like that about how to do like a protective put for your entire portfolio without having to touch every single stock. Because like if you had a portfolio with 100 stocks, you wouldn't want to do a protective put for each one. So there is a way to do a protective put on your entire portfolio. You can do that with ETFs. So that's not actually a factor that is like preventing you from choosing an ETF.
I agree. It's not a factor, but it is an impact. Like, now I got to worry about my neighbor's crappy house, right? So it's like, it makes it less effective what I'm able to do, right?
So I guess for some people that might be true, but for like me, I would say like, I can not have to worry if I know that what I have covers, like you said, insurance, like for your house. I would rather have umbrella insurance that covers fires, earthquakes, floods. I'd rather have them cover all the natural disasters instead of just picking, okay, well, I'm in California, so I'm just going to pick fire. Well, what if an earthquake happens and I'm not covered anymore? I'd rather have the umbrella, not the single one thing, right?
So for the beginner investor, so I mean, what we're talking about, the beginner investor, yes, the ETFs are the one, but you really need to get that knowledge so that even choosing sectors, now you're trying to pick and choose sectors because now you won't be diversified if you're all in tech. So, it does require some knowledge. You do need to go down that path, go down, you can sign up for a workshop, but whatever you need to, there is a little bit more knowledge. It's not the Staples easy button where it's just buy QQQ and that's it.
Okay, yes. So that's always true for anything that you want to do. You have to actually get the knowledge, the education. Yes, it is the first easy button to just pick an ETF, but that's just your first thing that you can do. That doesn't mean it's necessarily the best thing for everybody. So you do have to learn about it and go to one of our workshops or like take one of our classes to actually learn about what's right for you. But that's just, that's normal. Like anything that you want to be good at, you have to learn about. It's not like we were born knowing how to do everything perfectly. We all have to learn.
Right. And I know you've done videos and I have as well, but like just how to pick stocks, right? Because it can be just as simple as everyday things that we see around us in our world. You might drive a Tesla, it's like it's good quality, and I like that stock. So that's really why stocks versus ETFs, I'm more on the stock side, right? Because it's not quite as hard, I would think, to pick the ones that you know and use. Right?
So I agree with that because I've even done a video on how easy it is to actually pick a stock. So I totally agree with the whole, it's easy, it's not that hard to pick a stock. But when I'm talking about the very first stock, the very first thing that you invest in, ETFs, I still feel are the safest investment for like the very beginner who doesn't know anything about, doesn't know anything about companies, doesn't really know anything about like what they should be investing, picking an ETF like that just kind of covers like the broad stock market is like the easiest and safest way to like get your feet wet.
Yeah. So I mean, in terms of fees, stocks, you don't have to even pay those expense ratio fees. Now, admittedly, ETFs are way better than mutual funds. Do not touch mutual funds at all, right? But I don't know, stocks have less fees too. So.
Well, so we've had a great conversation and we could go on forever on this. So you can already see that me and Tony are just like, we could go on for another 20 minutes. But you know what? Come to one of our workshops. We can get into the actual nitty gritty details about why you would do this or why you would do that. So
yeah.
Really.
Yeah. So make sure you hit the like, hit the subscribe, put some comments in. We'll answer as best as we can. And, make sure you watch some of our prior videos. But we'll see you next time.
Have a great time.